Everyone's doing good. Welcome back to another video. Today, very quickly, I'm going to be covering imbalances. So yet again, we're starting a new series on the channel. So this little series is going to be based on smart money concepts. So smart money concepts, usually a lot of the time you will see being used in forex. You'll see them being used in futures trading, and but in reality, they can be applied to spot trading, they can be applied to other markets as well. These things do work all around. So just very quickly, this is the first video. Quite a basic concept. Once you wrap your head around it, it's easy to use, easy to get used to. So let's just get into it. So imbalances. So what are imbalances? Imbalances are also known as IPAs or FVGs. So these are just different names you might see people write them down as on their chart. So for example, over here, I've got an example, right? So here somebody might write 4-hour FVG, 4-hour IPA, or whatever. Imbalances are areas where there is only buying or selling pressure in the given price zone. This results in a candle forming a body with no wicks around it, as shown in the diagram. So here, if you look at this box that I've drawn on, there's no wicks inside this box, right? So there's just candle body. We've got a wick here, so of course that's where the box starts from, and down here we've got a wick over here, so of course that's where the box essentially ends. So this area of price is an area that needs to be filled, right? So what this means is when the market is inefficient, it will typically return to fill the imbalance. Therefore, it can be used as confluence within your trades and setups. So in very simple terms, this is an area where there's only one thing happening in the market. For this example, is selling, right? Because there's only red candle, there's no wicks. So what this means is that this area, the market will return to this area, and if we have an imbalance, what happens? It needs to be balanced out. So the market will then return to that area, will have a wick inside, which essentially introduces some buying pressure to that same price zone, which means the imbalance has been balanced, if that makes sense. It's nothing too complicated, but let's just get on the charts and try to find some and go through it again. Okay, so this is the one chart, one as in harmony, and I'm gonna come down to the 4 hour actually. So yeah, we've got a couple imbalances here, as you can see. So massive red candles that need to be filled, or some of them have been filled. So for example, just to make it clear what I mean by imbalance, right? We're gonna have, okay, yeah, let's draw around there, right? So this is our 4 hour chart. Let's mark this up. This is just how I learned them. I learned to call them FVGs. They're called fair value gaps, so that's just what I write. So essentially, up to this point, this imbalance was not filled in, right? And then of course, price returned to the zone, filled the imbalance in. So that's literally all it is. So price is, leaving this gap. It's called a fair value gap. There's a gap. Price is going away, and then it's returning to this gap to fill it in. So of course, now you know that price is essentially, attracted to them, or price can return back to them, right? Let me just add another one there. See a fair value gap. So again, 4 hour one. So the thing with imbalances, there's no time limit, there's no set date, there's no saying, okay, there's an imbalance, price is gonna come back. It could take ages. It could be, if of course there's no clear imbalance here, but let's imagine there's an imbalance around here, right? Let me just draw a box. Let's imagine there's an imbalance there. Now let's be realistic. Look at the price of 0.18. Look at the market conditions currently. What are the odds that price will come back up here and fill this fair value gap anytime soon? Probably not, right? So with imbalances, what I like to do is have them marked up on my chart. For example, this one, I would have it on my chart and keep it there just for reference. because this one's been filled in, I'd probably delete it. You don't need it anymore. If it's been filled in, you don't need it. And what you can do with imbalances is use them to build your trades. So if I just go back and undo, we're gonna get that. So this imbalance back, right? So now you know that this fair value gap exists. So how can you actually use it in yourselves, right? Let's just imagine that you were gonna long. You were, let me see what I see. Oh, that's not what I meant to do. Okay, let's just imagine we were longing from, I don't know, let's say here. For whatever reason, I'm not actually going to do the tier right now, but I want you guys to just imagine that for some reason we were longing from here, and when setting a target as a take profit, sometimes, especially me when I started out, I didn't know how to set my take profit. I knew how to set my stop losses and validation levels. I've got a video on that if you don't know about that already, but I knew how to set my stop losses. I knew where to enter, but sometimes setting a take profit became, a bit of a confusing topic for me. So with fair value gaps, usually another rule that you might hear is that 50% of the fair value gap gets filled, right? So what you could do is just very quickly just draw on your fibs, get your setup, move your take profit to 50%. So usually more of the fair value gap, as you can see here, the whole fair value gap got filled in, right? Literally perfectly, and went a little bit further. So if I did have my take profit up here, it would have hit. But just to be on the safe side, I like to place it around the 50% because it's just a rule that sometimes it can get to the 50% and then not go any further. And then even if it got to 50%, this fair value gap will count as filled in. So quite simple, I hope. Okay, the last things I'd like to quickly cover with your imbalances, they're points of confluence. Don't see an imbalance and instantly think, okay, it's going here, it's going here. If you see a 4-hour imbalance and you're trading on the 15-minute chart, be logical. If that 4-hour imbalance is very far away and your entry isn't pinpoint, it's possible that you might get stopped out before price even heads towards that imbalance. So use them as confluence and use them accordingly. You can find imbalances on all time frames, literally down to the 5-minute, 1-minute. You can find them on the 15-minute and actually use them in your trades as well. So yeah, just use them sensibly, and once you start using them, don't think all your trading has to be around these imbalances. The second thing that I quickly like to cover is the 50% fill. So of course, sometimes price will fill the whole imbalance, or it might just fill a bit of it. For me, the way I trade it, and others might do it differently, but if the 50% hasn't been filled, I'll expect price to get to the 50% and then I will take the imbalance off my charts. But that's just how I trade. Other people might trade different. They might wait for the whole imbalance to get filled and so forth. Imbalances act as magnets, and once they're filled, then they have no effect on the market. If there's a previous imbalance and now it's been filled, you can just take it off your chart. There's no need to have it there. It's not going to have an effect on price anymore. Anyways, if there's any more questions, just let me know, and I'm going to be back very soon with a video on all the blocks and how to use them in your trading.